Nobody expected this. All cryptocurrencies are up, some of them 10%, some of them 20%, and nobody seems to agree what's causing this rally. Now let's dissect what's the driver here, what's outperforming most, what's underperforming, and how much longer could this rally last? Because it looks like this is a very broad rally. Pretty much everything is going up, but things aren't that easy. This is Bitcoin's dominance. How much of all of crypto is currently in BTC? And while this is trending up over the last 4 years, it wasn't necessarily doing that well in the last 24 hours. The chart for Ethereum's dominance looks very different. Ethereum is the true outperformer. Its dominance moved from 10.6% to 11.6%. So what causes Bitcoin to just appreciate with the rest of the market while Ethereum pushes up everything? Now there's a lot of correlation between Ethereum and the altcoins, and that's because altcoins, many of them, are directly tied to the Ethereum price. So many altcoins actually don't trade directly versus the US dollar, they trade versus Ethereum. When Ethereum goes up by 20%, then many altcoins per default also go up by 20%, because many liquidity pools are bound with Ethereum, not bound with the US dollar. Here, have a look at this. This is dexscreener.com. Chainlink, for example, the most liquid token on Ethereum. It trades versus wrapped Ethereum. Pepe the same, the Aztec token the same, SPX the same, Elon or Doge Elon also the same. That's now on the Ethereum chain, but it's very similar for Base, or for Polygon, or for Arbitrum, for those layer 2s on top of Ethereum as well. Many altcoins don't trade versus the US dollar, but versus Ethereum. So when Ethereum goes up by 20%, then the altcoin, without a single transaction happening, also goes up by 20%. That's why this outperformance in Ethereum's dominance leads to all of those altcoins doing so well. So again, what's causing this rally? People are disagreeing. Some say that this is because the treasury is now buying back long-term government bonds with, of course, short-term bills. And that's potentially some monetary easing. It does not increase the money supply, but it makes financing of the government a bit more stable. Some people say that this is the Securities and Exchange Commission, the SEC, becoming more crypto friendly, as in especially small crypto projects. They don't have to do that much more registration as a security. They don't have to do much disclosure. If you raise less than $5 million, there's very little for you to do. If you raise $75 million, still, you just need an exemption for the first 12 months regarding project disclosures. Now, I'm not sure if those are really the reasons. I think lots of price development just has to do with relative valuations. As in, if a particular crypto asset is very cheap versus the rest of the market, people are more likely going to buy it, and then even the smallest of positive news has a massive impact. If people are already very bullish on an asset, then even positive news can lead to a sell-off, because then people say that expectations have not been met. So really, it's about valuation versus news. When valuations are low, it doesn't take much for the price to rise. If valuations are very high, expectations tend to be that high, it's very hard for the price to continue to appreciate. And Ethereum especially had been hammered quite a bit. And some were already anticipating a potential rally. We talked about the divergence in terms of ETF flows. So 2.6% of Ethereum supply is held by the US spot ETFs. 3.3% of Bitcoin supply is held by its ETFs. We can see that in July, a lot of Ethereum supply got absorbed, but also recently there was more Ethereum absorption than Bitcoin absorption. Here is the delta, so how much of the supply of each asset gets absorbed by the ETFs. Already over the last 2 months, we have seen more ETH accumulation than Bitcoin accumulation. And that led to Bitcoin underperform Ethereum. And this already existing trend is now just accelerating. Now have a look at this. This is Bitcoin relative to ETH, and the dotted line, that's the average ratio between the two. We're going to get very close to the long-term equilibrium. So the question is, are we going to see continued underperformance of Bitcoin? As in, will the momentum continue or will it slow down? And will we stay at this long-term equilibrium. Now, historically, we always tended to overshoot the equilibrium. So my best guess is that Bitcoin might be struggling in the next weeks. But of course, I don't have a crystal ball. It's simply just how I interpret the data here. Now, if you've been following this channel, you know that I like to trade trends based on moving averages. And for Bitcoin, the best moving average is the 116-day simple moving average. We have already crossed that. However, a slightly better signal is not to use the price cross, but to use the 2-day simple moving average as our trading trigger. So the combination of the 2-day SMA and the 116-day SMA, that's historically what worked best for Bitcoin. Now, we haven't been yet 2 days above the 116-day SMA, but if we close this day, so the 20th of August, above $68,000, and there is a chance that this bear market is over and that we turn around. Now, unfortunately, we have seen a fake out already in April and May of this year. And yes, according to the backtest, we should still be buying in a few hours if we just stay where we are. But if you wanted to know my personal opinion, I actually think that this is very likely going to be again a fake out. And here's why. In the past, with every bear market, the average Bitcoin investor was in unrealized losses. As in, we had to fall that much that the average Bitcoin investor saw red in their portfolio. Only then the selling pressure eased. Only then had we been able to turn around after a bear market. We have not yet been in net unrealized losses. That's one of the major points that keeps me bearish despite this rally. Another important point is this here. This is the stablecoin market cap relative to the US money supply. And yes, over the last 2 weeks, we have not seen any outflows. We even saw a bit of inflows with the recent rally. But when we just zoom out a little bit, the overarching trend is still very clear. Over the last 4 months, we tended to see outflows. And before that, we were just going sideways. And when we zoom out a bit, we can see that since there were no more inflows, Bitcoin's price was struggling. So those two lines are very much correlated. When money flows in, Bitcoin can go up. When money flows out, Bitcoin tends to go down. So without any inflows, without an expanding stablecoin market cap, I don't see this bear market to be over. And again, what we've seen so far in inflows has not yet convinced me. The overarching trend, I think, is still intact. We clearly don't yet have a wave of new stablecoins getting minted and people moving their hard-earned fiat currency into the crypto eco space. Yes, the last 3 weeks haven't been that bad, but let's see where this will go in the next 3 weeks. The patterns of prior bear markets clearly have not yet repeated. And while I do think it might make sense to buy some Bitcoin, either for the very long term, because over the next 3-4 years, Bitcoin is likely going to appreciate, or for the short term with very tight risk management, but I do think this might make sense. I'm not really sure the bear market has really turned around. If we do a short-term bet, we have to be honest and then also exit in case we fall below the 116-day simple moving average again. We then have to accept a loss like we had in April and May of this year. If we enter now with the intention of holding for many years, then of course the short-term timing doesn't matter that much. And even if we were to fall into net unrealized losses, that could be an opportunity to buy even more. I run both strategies at the same time. So I've got some Bitcoin that I never touch. That's just wealth allocation. That's diversification with my stock portfolio, with property. That's then the Bitcoin, the native Bitcoin on a hardware wallet that I never move. So that's simply for the long term. I don't touch that. But then I also have my actively managed Bitcoin. And that actively managed Bitcoin is now moving from short to long. And if you get a fake out, so be it. That's fine. Then I just exit when we are slightly lower again, wait for the bear market to continue until we get into net unrealized losses again, then hopefully buy back again cheaper. Those kind of mixed strategies are probably also the easiest psychologically as well, because we can take advantage of short-term movements, while at the same time, if Bitcoin just goes to the moon, we do have our allocation as well. By the way, if you're wondering how well does this 116-day simple moving average actually work, here is the backtest chart. So what we see over here, that's the strategy equity in US dollars. What we see at the bottom, that's the strategy equity in Bitcoin. So very long term, this tends to be quite good. It's better than just buying and holding. That's why I follow that trading approach. Still, nobody knows for sure if it will continue to work. And of course, there are our fake outs as well. But if we close this 20th of August above 68K, this backtest triggers a buy signal. And if it's another fake out and we lose our 6%, so be it. No trading approach is perfect. By the way, this exact trend follower made annualized 115% per annum, and it was launched in October of last year. And this is the performance since launch. So there's now 50% more BTC compared to just buying and holding. And of course, since we had been short, because Bitcoin was below the moving average just before this rally, the strategy lost some money. But medium term, right? This is just 10 months. It's much better than just buying and holding Bitcoin. So that's measured in Bitcoin. Here is the same measured in US dollars. So buying and holding Bitcoin lost 43% of the capital, and we lost less. We protected ourselves at least partially from that bear market. So if we now do turn around, we are starting at a level that's 50% higher than most people that just bought and held through this bear market. If you want to join this Bitcoin trend following strategy as well, then feel free to check out the premium membership. The link is down below. It's in the pinned comment. If it's your first time here, feel free to subscribe. I publish this regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time. Cheers.